What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in today's special weekend update, we're going to take a weekly look at the S&P500 SPX index. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so first up on these special weekend updates, I like to start out with the Bear Bull survey to see where the retail sentiment is at. So we can see that we do have slightly more bulls than bears, but we still have a significant amount of bears and people that are neutral on this market. The more people that are either shorting this market or sitting in cash are more likely going to eventually buy into this market as it continues to go higher. A lot of retail investors in bull markets are convinced that a crash is right around the corner because they're either looking in the rearview mirror at the March crash or they just get scared and cautious as the market reaches new all-time highs. But like I always say, bull markets are defined by all-time highs. The definition of a bull market is higher highs, which means we're going to constantly be forming new all-time highs. So if that's the reason you're getting bearish, you're going to miss out on a lot of upside in bull markets because they will continue to go to new all-time highs as the market continues to form higher highs in a bull market. So this survey isn't telling us anything drastically from either side, but it is telling us that there's likely still plenty of cash on the sidelines that can continue to drive the market higher. Alright, so let's jump back over to the SPX, and remember, each candlestick on this chart does represent 1 week's worth of price action. So this is a macro level view of the market, and we could see that we did close out last week with a very bullish week, and we came down from that sell-off that we had 2 weeks ago, and we did close back above the 5 EMA on this weekly chart. So looking at two things here, we do have bullish price action, and we still do have a very strong bull trend. All of these moving averages are still positive sloping, and they're still stacked to the bull side. In a bull market this strong, you really don't want to try to call a top, and you don't want to try to short the market. Remember that markets can be irrational, so don't try to rationalize a bull market and don't try to put metrics on this bull market like valuations or anything other than the fact that it's bullish price action with bullish trending. If you remain objective on the stock market and you allow the trend to be your friend, you're more likely going to always be on the right side of the trade. Trying to use gut feel or bad news or other things going on around in the world are not going to make you a better stock market trader. Typically speaking, the stock market does not have to represent anything that's going on around us, and it does not have to represent the economy. So the number one reason we do objective technical analysis on the stock channel is because it allows us to look at the stock market and figure out which direction it's going in without adding any sort of bias or noise to the equation. So on the stocks channel, we've been bullish during this entire run, and as a result, we're doing very well. If you've been hanging around the stocks channel Discord since November, you've known that we've been on the right side of the trade for many months now, and we've made a lot of profits in that time. Imagine trying to be bearish or calling a top throughout this entire run and losing money while everybody else is riding this market higher and making a lot of money. That's why I always say the trend is your friend. If everybody is buying into the market and everybody is bullish, it doesn't matter if you think the market should be going lower or not. At the end of the day, the market is still going higher, and the market really doesn't care what you think it should be doing. The market is going to do what the market does, and you're going to benefit from following the trend and making money while the market is going higher. There will be a time when you're watching the stocks channel and I alert you that I think the market is going lower and that we need to start getting bearish on this market. But as long as you keep hearing me say that the trend is our friend and that we're bullish, you don't want to be shorting and you don't want to be trying to call a top in this market. So 2 weeks ago when we were getting this sell-off, we did position ourselves more defensively because it is possible that that sell-off did turn into something worse. However, we never got completely out and we were still buying the dip while we were keeping a nice cash position just in case we were wrong. However, as you saw, that paid off and we did get that nice bounce and we made really good money this week. So I always say, don't let 1 week or 1 day set a trend when you're looking at these charts. That's why it's so important that we see the moving averages are stacked to the bull side and we know where our critical support levels are. So remember, my 2021 price target for the S&P 500 is up here at 4040, and we're only about 4% away from hitting that price target. So there will be a day when we hit one of these price targets where that will be the top. However, when I say don't call a top, it's because we could easily blast through that target and continue to head higher. While I do think that is the price target for 2021, the stock market doesn't have to stop there just because I think it should. The stock market can continue to go higher, and that's why we'll continue to watch the price action when the time comes. But as you can tell, we are getting very close to that price target, and that will be a time where I personally will start considering taking a lot of profits and getting more defensive on this market. Usually the stock market likes to get ahead of itself and then go through a correction before it starts heading back higher. So what we're likely going to see is this bull rally continue out until we hit one of these price targets, and then the market will need to go through a correction, which will be healthy and will still be in a bull run, but we will probably see somewhat of a 10% pullback from those highs. That doesn't mean we're going to try to short, and that doesn't mean we're going to try to call a top. That just means we're going to get defensive and we're going to get ready to buy the dip because we still want to be positioned long in this market. We don't want to short because it's much harder to short because typically the stock market takes the stairs up and the elevator down. So to properly short the market, not only do you need to perfectly call the top, but you have a very small window of time that you are going to be right. And if you mistime it, you're still going to lose money on your short position because the market can continue to go higher before you expect to make money on that short. If you've ever tried shorting, you probably already know how difficult it is. So if you haven't tried shorting, just believe me when I say that you don't want to try shorting in a bull market. It's just simply not worth it unless you're an expert at shorting, which not many people are. So another thing to note on the S&P 500 is the upper Bollinger Band still has a nice gap where we can continue to run higher. Remember, if the market gets too far extended and we start closing above that level like we did back here in November, we likely will see a week of cooling off and retracement before we can head higher. But what we currently see is a strong trending bull market, and you can even see the Bollinger Bands are trending in the upward direction. So it's very possible we're going to continue to head higher, which doesn't mean we won't see any volatility or any selling, but we always want to know the direction of the market because that allows us to understand if we want to buy the dip or if we want to wait to see if we're going to have further downside. So right now the market looks very healthy, and you can see from the price action and the trend that we're in a very strong bull run. So next up is the NDX, which is the NASDAQ 100 index, and we could also see a very similar sign. The price action is back over the 5 EMA on the weekly chart, and we're in a very strong bull trend with all of these moving averages stacked to the bull side. Now my price target for the NDX is up here at 14,488, and from last week's close to that price target, that's about 6.5% more upside. So my price target on the S&P 500 has about 4% more upside, and my price target on the NASDAQ 100 has about 6.5% more upside. So there is still upside left in this market before we could possibly see a top and then a deeper correction. Remember, I'm not saying that these numbers have to be the top, but these will be levels that you want to pay close attention to if you are waiting for a deeper correction in this market. So at the rate we're going, it does look like the market can continue to climb higher for another 2 to 4 weeks before we get into these levels. Of course, there's always the possibility that we get a melt up or blow off top and we get to those levels way too fast, which usually means we're going to see a steeper sell-off, and usually we'll see a bigger sell-off quicker if we get a blow off top scenario. But if we just keep grinding higher towards that level, it's still possible that we take the stairs up and the elevator down. So always be prepared for anything in the stock market. It's never going to be completely how you expect it to happen. If a lot of people are getting bearish on this market though, that typically means that the market is not ready to correct. There's very few stock market corrections where retail investors expect it to happen and they time it perfectly. Typically speaking, if you go by retail sentiment and all retail is getting bearish and expecting a correction, that only means that it's less likely to go through a correction. The stock market is very tricky and it's going to catch you when you least expect it. So the number one thing to watch is that we are in a technical bull trend. The price action and the trend is bullish, and we still have price targets outstanding that we have not yet hit. So that's why on the stocks channel, I'm going to remain bullish because there's no reason to try to call a top. So I hope this look at the stock market helps you understand why I'm bullish on this market and why I'm not trying to call a top at these levels. Remember, there is the stocks channel Discord. If you're looking for a disciplined and profitable trading community, you should really come check us out. We're absolutely crushing this market right now and making a ton of money. You can find out how to join the Discord server by clicking on the link in the description of this video. So I hope you all enjoyed this special weekend update. And as always, I will see you in the next episode.